Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And I focus my attention on SPX and SPY levels. And when traders buy and sell puts and calls on SPX and SPY, market makers take the opposite side of those trades and hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX, market makers and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned at the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions or comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector. Welcome. Glad you're here. Hello, everyone else. Welcome. Glad you're here as well. And happy Friday. All right, here's my agenda for today, Friday, August 9th. First of all, I want to go over news items, economic data, and events. Not really anything yesterday, but there was what turns out to be a very significant data release yesterday. I'll talk about that in a few minutes. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's get started. First of all, news items, economic data, and events. Again, nothing today. But yesterday there was what turns out to be a very significant data release. Let's take a look at that let's go to SPX. I'm going to go to this is a 1 minute chart showing this week, price action for this week. Dark shaded portions are showing the regular trading hours. And again, this is SPX. The underlying index. This is Wednesday. Note Wednesday closed just below 5,200. That was the put wall at the time. Then gapped up. So from a close of around 5,200 up to almost 5,330. So almost 130 point move higher just based on jobless claims, which came in slightly lower than expected. So that provides a very strong clue as to what the market participants are focusing on now. And they have shifted their focus from entirely inflation to now the economy, worrying about potential recession and weakness in the jobs market. So I've never seen a move like that just based on the jobless claims. Jobless claims is usually a very low impact event. So again, rally over 120 points just based on the jobless claims coming in a little bit better, lower than expected. And more on that chart in just a minute. All right, so that wraps up this week. A very light week as far as events and data releases go. All right, so let's move on to positional analysis now. Hello, Sam. Welcome. Glad you're here. Hello, Stephen. Welcome. Glad you're here as well. All right, this is the ES Futures and Bookmap, S&P 500 Futures. Before I take a closer look at this chart, I do want to take a look at a higher time frame. I'm going to start with the SPX. This is a one-day chart in Thinkorswim. I've zoomed in on the data for this year. So this is this year. Rally began last year. Correction began this year, April 1st. And then the rally resumed after the April options expiration on April 19th, so the Monday after the rally resumed. The reason I point that out is there's a potential analogy for the August expiration. So the April expiration put dominated, and of course, well, we'll talk more about this in just a minute, but the August expiration is setting up to be very put dominated as well in a very negative gamma environment. All right, so this correction began right here. This was July 17th. That was VIX expiration. And that was 2 days before the July expiration shown by that red vertical line there. Volatility, both implied volatility and realized volatility or historical volatility, has expanded substantially. And that's typical of a very negative gamma environment. All right, so that's a one-day chart. Again, looking for a potential analogy of a repeat of the similar action around the April options expiration, looking for that potentially into the August expiration. All right, let's move on. Let's take a look now at a 1 hour chart. And we'll get back to Bookmap in just a minute. All right, so this is the current correction began Wednesday, July 17th, VIX expiration. 2 days before actually 3 days before the July expiration. And note, I talked about this on Monday. I think there was an issue with the YouTube recording. That was at the bottom of the gamma curve, almost to the tick. This low of 51.19 for SPX. That was at the bottom of the gamma curve, where market makers were fully hedged due to their units that they purchased far out of the money puts. And so far, since that Monday, SPX has rallied. Wednesday again found support right around the 5,200 put wall, and then rallied sharply again based on the jobless claims data that came out yesterday morning, 8:30 a.m. Eastern Time. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. SPX trading almost in the middle of that range, and looks like close to unchanged for the week. This is the closing from last Friday. So SPX right in the middle of that weekly range, almost unchanged for the week. It's been a very eventful week, great trading, but right now, SPX almost unchanged for the week. All right, the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from last Friday, from yesterday. And I do post those levels in Discord every evening the day before. And SPX also trading within that range as well. All right, let's take a look at the Spotgamma levels on this chart. These are levels that are provided to Spotgamma subscribers. They're available on a variety of trading platforms. This is Thinkorswim. Again, a 30-day, 1-hour chart. And I'm going to point out the key daily levels. Again, these are based on gamma-weighted open interest. The first level is 5,000. That's the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. The next level up above that is the put wall at 5,300. That's a strike with the largest net negative gamma. That can act as support. That's expected to act as support. So that's the strike with the largest net negative gamma. Again, and it did act as support today. And note that level did move up from 5,200 yesterday to 5,300. So that is bullish. And the next level up is the volatility trigger at 5,400. That is Spotgamma's proprietary gamma and volatility flip level. Below that level, market makers' position on the gamma curve is negative, and they have to, in a negative gamma environment, they have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility when market makers are trading with price on the way down and on the way up. Note that level did move down from yesterday, and that is somewhat bearish. And then finally, the call wall is way up here at 6,000. That's a strike with the largest net positive gamma. That can be expected to act as resistance. And of course, that is well out of play, not a consideration today. All right, so mixed picture for the shifts in levels. Put wall shifted higher, volatility trigger shifted lower. All right, now let's take a final look at SPX with a 1-minute chart and talk about some keys for this week and for today. All right, so let's focus on this 5,300. Spotgamma is calling at a range of 5,300 to 5,315 is their risk off, risk on level. So again, this is looking at price action for this entire week. So again, there's the low on Monday, 51.19 at the very bottom of the gamma curve. On Tuesday, SPX rallied up to around the 5,300 level and was rejected there at the end of the day. Same thing on Wednesday. Price made it a little bit higher, but was rejected earlier in the day from 5,300 all the way down to 5,200. The put wall at the time held as support. Jobless claims came out. SPX rallied, consolidated in that 5,300 to actually around 5,330 range. And then it looks like it has broken out of that consolidation. So there was a final test of the 5,300 level, and that was key for today, is that 5,300 in that range that had acted as resistance earlier in the week. Now SPX has broken out above that. So earlier today, we'll take a look at this in, we'll zoom in on this chart. So there's the put wall, 5,300, then a combo level, it looks like, just above that. So this zone here acting as resistance yesterday, price broke above, acted as support again today, and now SPX breaking out of that range. Next target above would be 5,400. So that was key for today, key for the thesis today, looking for that 5,300 level to hold as support. It did. In that case, my bias was bullish with that 5,300 level holding as support. All right, so again, finally, 5,300 put wall acting as support. All right, let's move on. Let's take a look at Bookmap now. All right, so in Bookmap, I have my own cloud notes, so I can show SPX levels. There's that 5,300 level. Oops. I thought I'd fix that. Give me just a moment. Sorry, I got one of the levels wrong there. All right, so the two levels around 5,300 today. I'd fixed that before. Somehow that got got changed back. That 52.77 level should not be there. All right, so that line has disappeared. That label will disappear in just a minute. All right, so key for today again, 5,300, a little bit lower, held as support before the cash open. Then in the cash open, held as support. So again, I have SPX levels on this chart. Note there's a difference in price between ES and SPX. And today it is somewhere between 25 and 26. I'm using 26 right now. So I'm showing 5,300 at 53 ES 53.26. And no doubt I do post the index relationships that I'm using every day in Discord. All right, so key for today again, 5,300 held as support. So there was a retest around 950. Price started making higher highs, higher lows, higher highs. Retest of this 530. This is the SPY 530 absolute gamma strike. So I'm showing SPX levels and SPY levels on this chart. So the key levels, again, 5,300 put wall support. And then after that, around the SPY 530 level, acting as support. And now SPX has rallied up to above 5,350. That was noted as resistance in the Spotgamma AM Founders Note. So that's the big picture view. Looking at that 5,300 level holding a support, it did, looking for a move up to 5,400 now. All right, shifts and levels again for SPX. Volatility trigger shifted lower, put wall shifted higher, and for SPY, the absolute gamma strike shifted higher to 530, shown right here. All right, that's the S&P 500. Let's take a look at Nasdaq. All right, this is the NQ Futures and Bookmap. I'm going to take a look at the underlying index chart. Start with QQQ. Really, the only Spotgamma level in play for today is the volatility trigger at 450. That level did move lower from yesterday, and the call wall also moved lower. So earlier today, QQQ was trading below its volatility trigger and now trading above. All right, so that's QQQ. Let's take a look at NDX. NDX. All right, this is 2 days worth of price action for NDX. Let's zoom into, well, we'll leave it like this. All right, so there were some levels on this chart just above, shown on the NQ chart for today. 2 Spotgamma levels below price around those levels acted as resistance earlier today. Now NDX has broken above those levels, and that is the 18,487 combo 4 level and the 500 large gamma 3 level. Above that is the volatility trigger and 0 gamma level at 625 and 645. All right, so there's NDX in between 2 sets of Spotgamma levels. Shown here and here with an QQQ combo level in between the volatility trigger level and the 0 gamma level. All right, so again, I have my own cloud notes, so I can show, I'm showing QQQ levels, NDX, round number levels. This is the only, looks like the Spotgamma level, the 450 level for QQQ. You can't see the label there, but there are 2 lines right here. That combo level, NDX combo level, and the QQQ 450 level. Volatility trigger level. All right, so again, I have my own cloud notes, so I can show the QQQ levels, NDX levels. Earlier today, around the 446 level, QQQ 446 acted as support. A retest around 10 a.m. and that was a good entry point for long. And then later the 447 level held as support a couple times. And we'll take a look at setups in just a few minutes. All right, shifts and levels for Nasdaq. Again, for QQQ, volatility trigger, call wall, both shifted lower, slightly bearish. And for NDX, the volatility trigger also shifted lower. All right, Hector asks if AG, I assume you mean absolute gamma strike, is above 0 gamma. Since it's positive gamma, should I expect strong uptrend? All right, so I think there's, sounds like there may be some confusion there. So first of all, I don't think there's any consequence to the relationship between the absolute gamma strike and 0 gamma. In this case, for the SPX, the absolute gamma strike is well below the 0 gamma level. And if price is below, let's look at the volatility trigger. That is the most important level. Most important, again, the volatility trigger, that's what Spotgamma focuses on. That's where market makers have to change from trading against price above to with price below. That's where their hedging requirements change, the volatility trigger. So I'm just looking at price, whether it's below or above the volatility trigger. And below the volatility trigger, for price, I'm considering, with market makers trading with price, I'm looking for bigger moves, wider ranges, more trend days. Above that level, I'm looking for market makers trading against price, but a typically slow grind up rather than fast moves like yesterday, just 120 plus point move based on jobless claims. That's typical of a very negative gamma environment. Strong put Vana rally. All right, so this is Nasdaq. We'll take a look at setups in a few minutes. Let's finish up with positional analysis. Let's take a look at market makers gamma notional. See how they were positioned on the gamma curve at the beginning of the day. This is the data table at the bottom of the Spotgamma AM Founders Note, showing market makers' position on the gamma curve, gamma notional. For the S&P 500 and Nasdaq, note all these numbers are negative, indicating for an index, traders are long puts, market makers are short puts, hence the negative gamma. And again, they have to trade with price to hedge their delta exposure. Again, all those numbers are negative, but less negative than yesterday. And that's based on that strong rally yesterday, gamma notional becoming less negative. All right, let's take a look at the Vana model just to get a graphical representation of what that might mean, and then we'll move on to setups in the live market. All right, so what this chart is showing, this is the SPX Vana model showing delta notional on the vertical axis and the price for SPX on the horizontal axis, two curves on this chart. The light gray curve is showing how market makers delta notional may change with changes in price only, and the purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vana effect. Vana is a second order Greek. All right, let's check on prices. So we know the low of the day was right around 5,300. Low of the day again, right around 5,300. And the high of the day, it looks like right around 5,360. Let's check those prices on this chart. So there's the low of the day, right around 5,300. 5,360. So looking at the horizontal axis here, price has increased. Implied volatility drops typically when price increases. Market makers delta notional decreases. and they can buy back short hedges to hedge their delta exposure. That's a put Vana rally, so this works both ways. In a negative gamma environment, and this curve is very typical of a negative gamma environment. There's really no kick to the upside on the right side like you would see in a positive gamma environment. So market makers trading in the direction of price. In this case, as price has moved up, market makers can buy back short hedges. In this case, that would be ES futures hedges. All right, that is the positional analysis. Again, my thesis for the day. Of course, considering this Vana model, negative gamma, looking for higher volatility. And again, the key for me today was watching that 5,300 put wall hold as support, and then looking for a price move higher, and then confirming that with what options traders are doing. So moving on now, let's see what options traders were doing. The information that we've looked at so far is based on static data. Spotgamma takes open interest data, applies their algorithms to that data to come up with the levels, the Vana model, the gamma notional. I base my thesis on that, and now let's move on to execution and see if we can confirm that bullish thesis. All right, so I'm going to look at the S&P 500 first. Again, moving on to real time, moving on to execution, taking a look at what options traders have been doing today. This is the S&P 500 hero signal. There are two signals. We'll start with the index signal. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all into one combined signal. It's just showing options trades and market maker hedging activity for those four instruments. This is the index signal. There are two lines on this chart. The white line is price for SPX, and the purple line is the hero signal. A falling hero signal indicates traders are taking negative delta positions. They're buying puts and or selling calls. A rising hero signal indicates they are taking positive delta options positions. They're buying calls and or selling puts. So this is the index signal, and pretty bearish for the day. And I'm going to take a look at, shift this. Well, first of all, let's actually, I'm going to go ahead and shift to puts and calls. So what this chart is showing, the orange line is showing calls, blue line showing puts. Both are negative. So net for the day, traders are buying puts and selling calls in the index signal. So that's the index signal. Now we can take a look at the equity signal. So this is the S&P 500 equity signal. Again, taking a look at puts and calls. Let's take a look at full screen. So what this chart is showing is options trades and market maker hedging activity for a combined signal of all 500 stocks in the S&P 500 index. And this has been what has been driving price in the S&P 500 today. Again, orange line showing calls, blue line showing puts. A rising orange line indicates traders are buying calls. When traders buy calls, market makers sell the calls. In this case, they have to buy stock to hedge their delta exposure. Note, for most of the day, the blue line and orange line have been moving in the same direction. That's typically a very strong directional signal, strong directional indicator signal starting right around 10 a.m. Blue line, orange line moving the same direction. Good for a long setup up until about 11:10. And the call buyers start selling calls Traders start buying puts, stop selling puts. Price moves lower and then reverses higher again, somewhere between 12:20 and 12:30. All right, so this is the signal that I was focused on today. All right, so let's go take a look at, go back to Bookmap now. Go to the S&P 500, ES Futures. Let me zoom in just a little bit more. Give me just a moment to rearrange this chart. All right, so we know starting right around 10 a.m., traders started taking positive delta options positions in the S&P 500 equities, the stocks in the S&P 500. So let's take a look at the clues in Bookmap. First of all, we know pre-market that around the 5,300 put wall did hold a support and did again right around 950. Then right around 10, ES made a higher low. Note also large traders coming in and buying with iceberg orders. That's shown by the light blue line in the subchart. Also the on-chart indicator. Large traders buying with iceberg orders. They use to hide their size. Volume dots in Bookmap are showing market buy minus sell. And that's also indicated by the cumulative volume delta there. And the cumulative volume delta actually began to rise before 9:45, right around 9:45. So aggressive buyers started to come in, shown by the green volume dots. Large traders with iceberg orders. Price moved higher. And remember that index signal was negative at the time, so there was some pressure, downward pressure, so not nearly as strong a move today as yesterday in the S&P 500. A little bit more consolidation after that strong move yesterday. And again, the hero signal for the equities was bullish. Hero signal for the index negative. So far, call buyers in the equities really driving price. That was shown with the hero signal for the S&P 500 equities. And again, I just talked about the clues for this long setup, specifically the cumulative volume delta as well as the large traders coming in with iceberg orders. All right, let's focus on this move just before 12:30. Go back to hero. And that time frame, that's when traders started to, they stopped selling calls. Hero flattened out for a few minutes, maybe about 10 minutes. Same with puts. They stopped buying puts. Hero signal levels off. Oh, that's 1045. That's that next move higher. Sorry about that. All right, so similar. Traders stop selling calls, stop buying puts, start buying calls. selling puts, blue line, orange line moving the same direction, and price reverses higher. Very similar to this 1040, 1045 reversal higher. So really three main legs higher. Right around 10, right around 1045, and again around 1230. Let's go back to Bookmap. And there are those three legs higher. All right, let's take a look at Nasdaq. Any questions about this? Any questions about the S&P 500? A little bit more difficult to interpret today. Sometimes it takes some time to determine exactly what is driving the S&P 500. And today it looks like to me that the options trades in the equities, S&P 500 equities, have been driving price. All right, here's Nasdaq. Let's take a look at Hero for Nasdaq. Shift back to puts and calls for a minute. So just like the S&P 500, there are two signals we can take a look at for Nasdaq. The first is the index signal, combined signal of NDX and QQQ. Up until about 1:30, it was bullish for the day, then started to shift lower right around 1:30. So this signal, much corresponding to price, much more closely than the S&P 500 index signal. There's another signal that we can take a look at for Nasdaq, and that is this Mag 7 signal. That's showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. These stocks make up a very large component of the Nasdaq and the S&P 500. All right, so let's focus on this signal. I'm going to shift to puts and calls. So just like the S&P equities, it looks like call buyers primarily have been driving price. This is, again, is the equities. Note the notional values here. Positive 536 million, and they are selling puts, but notional value much lower at around 75 million. Again, both positive, traders buying calls and selling puts. All right, let's take a look at Mag 7. And for the Mag 7, they're actually buying puts. That's shown by the negative notional value here. Looks like right around 1:30 it had almost reached zero before shifting lower again just after 1:30. But it looks like call buyers are driving price in the Mag 7 stocks as well. Let's go to full screen. So again, the three legs higher, right around 10, 1040, 1045, and then right around 1230. And after 10, both the orange line and blue line moving the same direction, but primarily with call buyers in charge. Let's go to Nasdaq. Three legs higher, and this is the one that really took off right around 12:30 or so. And to me, the order flow at least with the volume dots, is a little bit more clear with Nasdaq here. Let's just take a look at this move lower right here. Volume dots in Bookmap again showing market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots more buyers than sellers. Same here. Aggressive buyers starting to come in as the sellers become exhausted. All right, any questions about the S&P 500 or Nasdaq? We'll take a look at price action a little bit closer. I do want to go over several stocks, and then we'll get back to the indexes. All right, so just at the current moment, call buyers have taken their foot off the gas. They've started buying puts. So right now, orange line and blue line are moving down, and price is moving lower. That's the Mag 7. Same for the S&P 500 equities. All right, let's take a look at Apple. There are really only, I thought, two good setups in stocks today. I'll cover, I've got four altogether. And again, if anyone has any stocks they want me to take a look at, please let me know. I'll be glad to do that. All right, so this is a very nice long setup in Apple today. We'll take a look at Bookmap in just a moment. So starting right around 9:45, traders started buying calls, shown by the rising orange line. Note the flow alert comes in right before the call line. Actually, it's shown on the call line, but it's for both puts and calls. All right, so the flow alert comes in. This can often signal mean reversion, a shift from, in this case, negative to positive. And again, it's shown on the call line, but it's for both. So right around 9:45, traders start buying calls. Price moves higher. And it looks like, again, blue line, orange line moving in mostly the same direction, but call buyers definitely driving price. Note the notional value, positive 111 million. And now net for the day, they are buying puts. That's minus 14 million. So call buyers definitely driving price in Apple. Let's go take a look at Bookmap. Very clear read in Bookmap here. Actually, the only thing that was not clear earlier today was the cumulative volume delta, shown in the subchart falling, but price was definitely moving higher. And this is to me typically an indication that the options traders are definitely driving price. A couple of tests of VWAP, deeper pullbacks. Note on this market pulse price change indicator that's shown here, I'm showing the extremes in bright colors, bright red, price change, negative extremes, green, bright green, positive, or that's actually below 70 and above 70. Anyway, market pulse price change, helping to confirm the deeper pullbacks. For long entries in an uptrend, two deeper pullbacks to VWAP as traders continue to take positive delta positions. And let me check for questions. All right, Hector asks, seems like hero buy calls, buy puts are in sync and vice versa. I guess is by, right, you say money makers, it's market makers, not money makers. It'd be nice to make your own money. Market makers, neutrality is correct. since they don't enter options, only hedge stocks and futures. Wonder if it is correct. The reason of that sink. All right, so not quite sure I understand your question. In this case, today, the hero signals for both the S&P 500 equities and the Mag 7 stocks, puts and calls are mostly in sync. So traders taking positive delta positions when they're buying calls, selling puts. Market makers take the opposite side of those trades. So those are negative delta positions, and they have to buy stock to hedge their delta exposure. And just the opposite when traders are selling calls and buying puts. Those are negative delta positions. Market makers take the opposite side of those trades, and they hedge their delta exposure by selling stock. And Sam asks, for SPX, are dealers selling puts or buying puts? It depends on what traders are doing. Market makers take the opposite side of those trades. So if traders are buying puts, market makers are selling puts, and they have to, that's a positive delta position, so they have to hedge their delta exposure by selling ES futures. So you can't buy or sell SPX. So for SPX, market makers have to hedge their delta exposure with ES. M. Zoltan says market makers buy stocks to cover call buyers and sell stocks to cover put buyers. That's correct. So again, remember, market makers are taking the opposite side of those trades, and they hedge their delta exposure by buying or selling either futures or stocks. So market makers' job is to make markets and manage their risk. So they want to remain delta neutral. All they want to do is make markets remain delta neutral. They don't want to take any directional risk. These are options market makers I'm talking about. All right, let's go back to Hero. We're on Apple. And call buyers definitely mostly driving price. And for most of the day, call buyers, sellers, put buyers, sellers are in sync. So right now for Apple, first of all, they stopped buying calls, started selling calls. And then just a few minutes later, they started buying puts. So for right now, Apple is moving down as traders sell calls and buy puts. Market makers take the opposite side of those options trades, and they're selling stock, Apple stock, to hedge their delta exposure. All right, let's take a look at the other stock that I thought was a good setup. So remember Apple in the morning, nice bullish setup as traders are buying calls and selling puts. Let's take a look at Tesla now. Up and down day in Tesla. And the key setup for today was a bearish setup with this rejection of the 200 key gamma strike. So looking at the blue line, it was mostly flat, maybe slightly bullish. And then starting about 5 minutes after the cash open, traders were buying calls. Again, market makers sell the calls. They have to buy stock to hedge the delta exposure. And then right around 10 a.m., when Tesla reached that 200 key gamma strike, that's shown by this small blue line there, traders started selling calls, buying puts. Tesla moved lower. Key level rejection there at the 200 key gamma strike as options traders started taking negative delta options positions. So let's go take a look at Tesla. All right, here's Tesla. Let's zoom in on this. All right, so Tesla now back up to that 200 key gamma strike. We'll zoom in on the morning. Then we'll take a look at the entire day. So very mechanical move up. Nice uptrend. The liquidity in the order book. These are limit sell orders at the 200 key gamma strike. This is typical of a stock. Traders will come in at the cash open with their limit orders. They will typically stay in the order book until they're filled. Classic absorption there. Note the shift in the volume dots, some large magenta volume dots, as aggressive sellers come in. CVD, cumulative volume delta, starts to shift lower. Price moves lower below VWAP. Pull back to VWAP. If you miss the first entry, that trend break right around 195 after the rejection of 200, then there's another entry for a short. Again, confirmed with the market pulse price change indicator. All right, so short setup in Tesla this morning. And Hector, I saw your earlier question. Market makers and dealers are essentially the same thing. They're traders and market makers. All right, so Tesla back up to the 200 key gamma strike. Price did break above that level. The flow alert that came in just after that breach of the 200 key gamma strike. Call buyers took their foot off the gas. Traders started buying puts. Let's go back and check price for Tesla. So now moving lower, making lower highs. All right, those are the best two stocks that I saw today. Let's check the indexes now. Let's go back and check Hero, check the equity signal. See if those lines have started to turn up. All right, so it looks like the call line is maybe flattening out, maybe turning up a little bit. And we'll see if traders start to sell puts. And I've only got a couple minutes left. Let's check Mag 7. All right, so same for Mag 7. Call line maybe starting to turn up again. Traders continue to buy puts. Do a quick check of the index signals. That still looks bearish. In the index, S&P 500 index, traders are selling calls and buying puts. They've pretty much been buying puts all day. Large block order came in. Large institutional block order buying puts. Let's see if that is in QQQ or NDX. It's in QQQ. Large block orders. Large institutional order buying puts in QQQ. Let's go back to Bookmap. equities. So one question now, will this 532 level, around that level, acted as resistance before? Will that now act as support? And for that to be the case, I would want to see on the S&P 500 equity signal, both the blue line and orange line moving up to confirm that. Check Nasdaq. I'd also want to see some green volume dots coming in, see some aggressive buyers or maybe large traders with iceberg orders. It looks like there have been these are not large numbers, but some large traders buying with iceberg orders. Again, those are not large numbers, probably not enough. Was certainly not enough to move the S&P 500. Check Nasdaq. All right, so that's around the QQQ 450 volatility trigger level. Around that level, acted as resistance earlier. Now the question is, will it act as support? And again, I'd want to see the Mag 7 hero signal. Both so the orange line, call line, starting to move higher. I want to see the put line moving higher as well. Check the Nasdaq. All right, so again, there's this large block order in QQQ. Large block order buying puts. All right, does anyone have any final questions? It seems like there might be some confusion about what market makers do. So if anybody has any additional questions, please feel free to post those in Discord. I'll do my best to answer your questions. So just to wrap this up, remember, market makers' job, options market makers, is to make markets and hedge their delta exposure. They want to manage the risk. They want to remain delta neutral. They take the opposite side of options trades, traders, options trades, and they hedge their delta exposure with underlying. Their underlying, whether it's for the S&P 500, for SPX SPY, they're typically hedging with ES futures, and for stocks, they're hedging with the underlying stock. And M. Zoltan asked how Hero works. I'm already 3 minutes over. If you have questions about Hero, first of all, I talk about Hero every day. Watch my YouTube videos. The recordings are available on the Bookmap YouTube channel. Also go to spotgamma.com, go to the support center. It's free and available for everyone, whether you have a Spotgamma subscription or not. But again, Hero is showing those options trades and market maker hedging activity in real time. So that's essentially what Hero is doing. And again, I talk about Hero in depth and how to use it every day during my webinars. And DK asks, can you briefly explain what you mean by hedging? So again, market makers, their job is to make markets and manage their risk. Traders, they want to take directional risk. Market makers do not. So when they take the opposite side of those trades, their delta changes, and they have to buy and sell underlying to hedge their delta exposure to remain delta neutral. So that's what I mean by hedging. All right, everyone, I need to wrap it up here. I want to thank you very much for watching. Thank you very much for your very thoughtful questions. Thanks for watching. Have a great weekend, and I will see you on Monday. And if you have additional questions, please feel free to post in Discord, and I'll try and answer your question. All right, thanks again. Have a great weekend, and I will see you on Monday. Bye.